Is HP an industrial company or a technology company?
Well, I don't cover HP. Tony Sacconaghi does at our firm, but we consider it I would consider it a technology company rather than an industrial company. I will say the HP 12C was the only thing on my desk when I showed up at Bain & Company in my first day back in the early 90s. Okay. Nothing else, no computers.
We're exclusive right now. Can Mitt Romney use an HP 12C?
I'm sure Mitt Romney knows how to use an HP 12C.
Exclusive right there. Can jump in here, please.
Well, I want to find out about industrials because I noticed that you did an upgrade recently of Tyco, and I'm wondering whether there is a new thinking in the investment community about going for companies that can either grow in an environment of sluggish growth or those that are somehow going to be able to be immune to any kind of downturn?
Well, clearly, this is a more defensive move on my part. I now have outperforms on Tyco, Danaher, Emerson, 3M. These are quality defensive names right now as I prepare for 2012 growth to be a slow growth environment, about half the growth rate that I was thinking of, I would say, even 9 months ago.
Here's a chart here on Emerson, Pimm. I want you to continue. You can't make money in stocks. When does this stop? On some of these industrials, they have been phenomenal.
They have. I think had someone like me jumped off the bandwagon about 6 months ago, you'd have been a hero in terms of how far they have moved up, except for Emerson, which has really actually struggled in the last year. I think at this point, if we look into the cycle right now and say we're still in a positive but slow growth environment, once the market, I think, comes to grips with that, there may be a little more downside, but then people will start looking out to 2013, a recovery, and I think off the bottom, these could start getting interesting again.
Tell me about green shoots in the industrial economy.
I haven't heard that phrase in a
well, that's
while.
why I bring it up. This idea that green shoots, what you really need is more fertilizer right now, right? QE3, do we really need it?
Right, Pimm, it's interesting. You and I talked about green shoots probably 2 years ago, and at this point, we're not using those terms again. I'm more looking to make sure that that things are still alive. Okay, and right now, people are not looking at stimulus. I think the U.S. government as a effective capital allocator is a question mark, and so we're really looking for what's going to drive fundamental growth of these companies and their own initiatives.
Yeah, let's bring up a note for a research note. There's a great note on the slowdown, positioning for deceleration. Management is best-in-class operators through the cycle, and we like the company, Emerson Electric. Their exposure to secular themes that provide some tailwinds to offset. So an industrial can be a defensive stock. I thought they were hinged to organic growth, revenue growth, and GDP.
It's interesting, Tom. We actually looked at those stocks that do better in falling and flattish markets. Emerson is one of those stocks. And the reason is that they're multi-industrial. They're highly diversified, and they're attached to themes like industrial automation, energy efficiency, critical power. These are things that drive through the full cycle as opposed to a cat or a deer, which are just highly contingent on only the macro. Macro is important, but there are other things besides just those.
What about returning money to shareholders, dividend policy? Everyone's looking for some kind of yield right now.
Right. I think across the multi-industrial names where you see 2 to 3% type of dividend yields, and those are going up as we speak, those are more attractive in the environment. You may see a shift out of machinery names into multi-industry names as a result of that strong dividend policy.
I just want to keep everybody up to speed on HPQ. You can see it come in here. Here's the market drop. Philly Fed opening up. There it is down further. We spike up, and we've really come back, Pimm. I think the love affair with autonomy and spinning off computers. Maybe it was that we had our. Can we get a banner, please? Winoker says Romney uses HP 12C. We need that from his Bain.
We're down more than 3% right now, anyway, on the market.
Well, we're down 376. Yes, we're coming back.
I mean, one of the themes that has been sort of going around in the marketplace has been trying to find the stocks that are going to be able to move higher in a market where people are getting out of risky assets. You see that when you see the NASDAQ sell off. You're seeing people move into large cap names.
I think large caps are safe. Okay, they are. When you get past the run that some of them have had, and you see that they've continued to spend on R&D through the cycle, they have continued to cut costs, they've continued to drive restructuring spend.
I hear 3M somewhere in the background there.
That would tell you that those that are highly consumable and aftermarket oriented, like a Tyco, whose 55% of their revenue is recurring, or 3M, which has a huge consumables mix, will do better. Now, in the near term, they'll get hit a little bit sooner, but then they recover faster.
Steve, let's do the number. This was a single sentence in your report that got my attention. The macro view, folks, the Standard & Poor's multiple, 12, the assumption was 13.5. What will industrial America do as they plan for 2012, given multiple contraction, given weak nominal GDP? Is it all go to employment? Is it going to be a whole nother wave of cost management?
I think that in my report, we're still basing it on the assumption that we have positive low single-digit growth. If that happens, these companies may hold back a little more of their cash than they might have otherwise done, but you're going to see them continue to invest in that climate. It's only in the fear of a recession, another recession, that I think you'd see behavior like you saw before.
Right. Well,
I just want to find out a little bit about cash on people's balance sheets,
quickly.
right? Because we've talked about this.
Yes.
Corporate treasurers, they're looking pretty smart now, because if you get any kind of lockup in the interbank lending market,
right,
this is visions of 2008 all over again, right?
Right. This kind of volatility, even though we're in a different kind of reason for the volatility, is going to mean that you still won't see corporate America, in my world, go back to the free spending that they had before. They're always going to hold a little more cash now.
Emerson Longs. Well, we're going to have to leave it there. Emerson Longs, 3M Longs. Stephen Winoker, thank you so much.